Ever wondered why some trades just click? It's not random, it's the strategy which can be learned. What if you are closer to a better risk management of your trades than what you think? Maybe you just need an alternative approach, and exactly that we are going to discuss in today's powerful video. We're going to learn how to manage the risk much more effectively. But before we start, standard disclaimer: any strategy, any way of trading method contains certain amount of risk. Not a financial advice, just for learning purpose. Now, straddle and strangle, which is very popular, almost everybody know this. From years, people been trading from many decades even. Let's talk about what these two strategy don't have and how we can make it better. Let's learn it. So here we are on an option simulator. I want you to carefully see the strikes. This is a short straddle. We shorted at the money, call and put. But there is some big issue in this. That is, suppose if we take the trade and market gives you any kind of a surprise, gap down, or market really start to go up, then what you see is that there is a real issue can happen with this strategy. As you can see very clearly, this is a number one issue. We'll try to work on this, we'll try to improve it. I'm going to tell you an alternative to this. If you like it, you make sure that you share this video as well. Now let's talk about the margins. It take approximately 2,40,000 rupees of margin. Roughly in the practical terms, minus the credit, it comes to be around 2,10,000. So obviously one of the most expensive strategy and very popular, but the risk is really high. Now a lot of people do this strategy looking at the maximum profit, which is around 51.9. But let me tell you one thing, this max peak profit which you see, it's only when market expire right at the peak, exactly on 3:30 p.m. on the expiry day. I want to ask you, how much is the possibility that the Nifty is exactly going to expire over here? Obviously the possibility is extremely thin, but the possibility of it crossing the range on the up or on the downside is very big. As you know, it market has been very volatile, a lot of gap ups or gap down. This is a short strangle, which is obviously as popular as a short straddle. Here what you see, the margin is little less, not much of a difference, but what you see in terms of risk, it's not really cutting it, because you are selling the call, selling the put. And there are a lot of traders who've been doing this particular strategy from a long time, very popular. Can we improve on this? Can we make it better? This challenge is accepted. And we're going to discuss more nitty-gritties of it in the next few minutes. If you like the concepts, you got to share it. Let's talk about the strategy creation, and then we're going to compare it. We're going to really do the stress testing of it together, you and me. Strategy creation, it's for you to take the screenshot. Number one, there are easy 4 steps to do this. Number one, we start with at the money straddle like we normally do, but immediately after that, we're going to buy a cover on the call side as well as on the put side, because as you know, naked straddle selling, it's very risky. Step number 3, once we do the cover, then we sell, and 100 points up we buy on the call and on the put side as well. So let me create this strategy for you, and then I'm going to explain you how this looks, and then we are really going to compare deep down, and obviously I'm going to tell you some adjustment points, some VIP points with this. I hope you must have taken the screenshot. Theory class is over, time for practical. If we select the strike exactly as per the rules laid out, this is how the payoff looks, and obviously I'm going to show you the strikes as well. But if you see this, couple of things must really jump out on the screen for you. Number one is the peak, which you see right at the top. Straddle has a peak. This is the straddle, it has the peak, right? This one also has the peak. But the most important thing is that if suppose markets start to go in any direction, you can see where my cursor is, we are looking at a really damaged and very extremely volatile trading. If we see here on both the sides, none of the side is covered on the up and on the down as well. Here what you see is, if markets start to go in any direction, we know very well how much risk are we taking. It is there for everybody to see. It's minus 2.6. Now let's compare the margin when we take a trade like this. So in terms of margin, we are getting some margin benefit here as well. Now let's just see strikes very carefully and let's just really zoom into this. The most valuable lessons I've learned didn't come from winning trade. They come from the right guidance. And here what we did is we shorted a straddle 25-200 and then we bought the cover 100 points up, 100 points down. Right? And after that, what we did, we went one strike further up. Here in this situation, right, we went 25-400, sold it, next strike we bought it, both on the call side and on the put side as well. When we do something like this is how it looks at the moment. And remember, this VIX is approximately 10.5 right now. But even in the worst situation, what you see is that if markets start to go in any direction, there is not much of a concern. Also, what you see is that if market just move a little bit, you see that there is a big hump over here, versus in the straddle, it just plain straight line, which the overexposed margin and the overexposed risk which we have. Now there are some more points to this. That is, for example, right, if markets start to go in any direction, suppose that how much margin is blocked is approximately 170. If this resonates with you, take a moment to think about what taking the next step could mean for your trading. And obviously, I'm going to discuss a bit about the adjustment points here. If you're somebody who really would like to go deeper into the concepts or strategies like this, the form which is in the pinned comment is your starting point. Let's just take a moment to think about how we can make it even better. Obviously, a straddle like this versus if we do something like this gives us some amount of comfort, some amount of cushion. And for those people who may be thinking that this strategy may contain a lot of legs, let me tell you one thing. If you already have a brokerage account, then you can buy these legs at much more cheaper. Depends on how much your broker is charging. At least if market gives you a big gap down, then the difference is for everybody to compare. Now let's discuss VIP points. Let's go a little more deeper into this. So VIP point number 1, can you make the outside strike to make it tighter as per your convenience? Currently the VIX is really low. If I show this strategy when the VIX is already high, you're gonna really compare how big and wide and beautiful this can look for your trading. But on purpose, I've taken this strategy in the worst possible situation in terms of VIX. VIX can go even more down, but the VIX is really, really low. Now, the screenshot which you took or the strike price which you noted, you can play around with this. The outer two wings, the call and the put, you can make it tighter, make it wider. You can also take a view. You can make one side more looser if your view is bullish or bearish. Always can be done. And obviously with any kind of risk defined strategy, the confidence obviously is a lot higher. Point number 2, adjustment coming in part 2 if you like to learn more about this. So I'm gonna really go down deeper if I make a part 2 of the strategy. How do I really adjust it? First of all, the losses are capped as we could see, but we would like to reduce it using the same margin. That can come in very handy, and it will require a detailed, lengthy explanation, at least 5 to 10 minutes for me to really dig down deep and tell you, probably run a simulation, really explain it like I've just explained how you can make it better. Straddle, strangle, these are popular because these actually does not take a lot of effort to make it. Strike selection, and that's why you see it's all one click and you can have your straddle up and running. But let me tell you one thing, the hit rate doesn't matter. If one trade can really damage your account. That's why the way forward is always keep on improving on your strategies and keep on learning the better alternative to do things. You can check the pinned comment or description for more resources. Also, I have made a couple of videos in the past. Your any favorite strategy which you've been doing from quite some time, there is an alternative, a little tweak which you can learn by the YouTube playlist, which I have it ready for you. I'm sure you must have enjoyed the video. Thanks for watching, and I wish you all the very best. Take care.